Alright, hello folks, LA Little here, and this is your daily TA wrap, where we take a look at these markets and we do it from a slightly different view, the neoclassical one, where we look at trend, supply and demand on the chart. We ask ourselves what happened today, what does it tell us about the coming days. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern time here from the base of the beautiful Rocky Mountains. Friends, it's an interesting market to say the least. We've definitely had some pressure last week, right? Remember last week we talked about it was going to be slow news flow. Potential for pressure was quite high, and that is what we saw. And then we came into today, and the question was, could we start to turn it around? And if we look at the ending numbers, yeah, we did to some extent. At least we stopped the bleeding. Thursday was a big day down. Friday, a little bit of a bounce. Today, a bit more of a bounce. If you look closely at the numbers, you'll see that the Russell was the leader, up 0.64. We talked about that being the potential place that we could see the bounce. It was giving us an indication off of Friday's numbers, along with the NASDAQ, that it had done its retest and wanted to try and regenerate. The worry that you have coming out of something like this, and the rest of the numbers, weren't that big of a difference, pretty much flat most elsewhere. But the big thing coming out of Friday into the day was really the geopolitical situation that had cropped up. We had the rebels in Iraq that were pushing towards Baghdad. Thursday, that was really the real reason that was given for the sell-off. And technically, we knew that there was the potential for some sort of a pullback because we'd had a straight-up run for 3 weeks. And so when we're looking at the S&P 500, that retrace on Thursday, then an inside day on Friday. We're still inside that Thursday bar. Volume picks up a little bit as we head higher today, but as you can see here on the S&P, we still haven't got to the top of the bar. Anytime you see this kind of a situation, right, where you get a push up and you have a possible ABCD type structure, the real question is, will you get that extension on up, or will it simply end up being a farther pullback with an ABCD type structure down, right? A bearish ABCD. Now, it just so happens the way this is set up, and many times it's the case, that would bring it right back into this retest, regenerate zone, or bring it in close. And so, logically one could say, boy, this sure makes sense that you get a larger pullback. That's where you might find your support, right into that zone, and then potentially your bullish ABCD structure takes over there and pushes back up. So that's always the question when you have a big run, either up or down, right? When you get them up and you come down, then the question is will it continue, right? Or will it simply go and make an ABCD to the upside? And that's not the best of examples, but it's the same kind of thing on the way down. So on this front, right, you have the potential now, right? Because you have a higher, right? You have a lower low here, and now you've actually got a higher low on a higher high on consecutive days. So you have the potential for an ABCD down. That's the S&P 500. Now, coming into the day, the two indexes that were showing relative strength and actually showing that they were retesting and regenerating already were the ones that were the weakest ones on the way up. And that, those stocks or those indexes were the NASDAQ and the Russell. And so on the NASDAQ, this retest regenerate is off the prior swing point high. And a lot of times I talk about retest regenerate. If you have access, well, you do have access, but if you want to take the time to come into the resources, into the forums, if you pop into the forums, I gave a fairly, you can ask questions here. It's open to any and everyone. There's only one area that's subscribers only. If you're not a subscriber, you won't even see this tab. You know, I'm a subscriber, of course, so I see it. But there's been some questions, and there's some good questions coming out of India. There's a gentleman over there that's been studying the neoclassical. I think he's got all 3 of the books, and he's quite studious in his attempt to understand this inside and out. And so if you come down to this area, I gave a fairly long explanation today on what a retest regen is and how it's a special case of an anchor zone. Anchor zones are typically off of 3 things, swing points, or actually 4 swing points, which are either wide price spread or high volume. Off of swing points themselves, anchor bars, wide price, high volume, and proximity to price. Retest regenerate zones, and we don't draw those in automatically on the charts yet. We will, but right now they don't. But a lot of times they end up being on the chart, and this one is pretty much that, and it ends up being that because there was an anchor bar here and another in this swing point here that allowed this to be an anchor zone. As price came back into it, it was within 6 bars, so it has a fairly good chance of making it to the bottom side of that. That's the first thing to know. And the second thing is that there's a reasonably good possibility that it will break. Now, when you have an uptrend, which is what we still have, we have bullish trend in almost everything still right now on all time frames. When you have that, your benefit of the doubt has to go to the upside. So as this tests into this area, it comes back in, has a little bit more volume. Now we're pushing back up. The key test now is, can you get over this bar, 43.2835? Because if you do, then you are probably going to actually have a successful retest regenerate. Right now, it looks that way, but you don't know that yet. It certainly could end up that way. And if it does end up that way, and it does regenerate higher, if you take and draw in the ABCD structure that's in place already, and then you draw in the nested one that's going to be inside of it now you've got some real strength to take this market up into this area, because you've got nested ABCD structures. And really, in my opinion, if you get over this bar's high, which was the Thursday bar last week, you've got a real good chance of breaking over this and shooting up there. So you've got a setup here on the NASDAQ. That's a retest. It is a regenerate so far. And if you look on the Russell, you have the same thing. And in the Russell, you actually got over that bar today. So Thursday's bar top was 1165.37. You close 1166.82. You do 292 into 302, so you have a slightly lighter volume, but you do test into the retest zone. And again, you go to the swing point high, you take the bottom to top of that high. You can see how it came into there, tested into it. You got over this little zone today on the way back up, off that swing, off that Thursday breakdown, not breakdown, but the Thursday pressure. Now you're over it. Now you have a decent chance to get up and to get higher. Russell has been the best indicator for a long time, still is in my opinion. 1166.14 is the low of the high. You're into that bar just slightly. If you get another push tomorrow, you're going to have the same setup here, although here you don't have the nested ABCD structures, but you would have another ABCD structure that would be in place if this one actually does start to push. It would take it right back up to the highs. So the highs are up there, they're waiting. Just got to get over this area, get back in here and start whittling away at this resistance that's up here, right, and pushing higher. I've talked about performance anxiety into the quarter. If these things start to move, I suspect that anxiety is going to heat up. It's certainly not going to fade away. So we've got the situation, exogenous events, that came out of Iraq last week that gave an excuse to sell. We had oil prices trade higher, although we didn't see that much of a continuation on oil today. If we pull up the USO here, that did a little doji. That one looks pretty worn at this point. It's also on a weekly coming into an area that's going to give it some trouble as well. So if I pull up the weekly, you can see it's coming into that big bar. At top is 39.46, and we're trading right up there, 39.18 as of tonight. Ukraine. Russia made good on its promise, Gazprom, to cut off supplies to Ukraine. They started doing that today. So that's a bit of an escalation there. That could be more of an issue that flares up as well. But then on the other side, you've got Chinese central bank provide more liquidity into some of the banks there, allowing them to make more loans, right, to ease the property condition situation, right, because there's a lot of pressure on the property prices in China, and honestly, in my opinion, it's a bubble as big or bigger than we had, and so they're trying to let the air out of it. They let it go down, they press it, they push some more paper into the system, they let it go down, they push them. So China keeps flaring with that. One thing for sure is China's not going to just walk away from it. They're going to keep peppering money in there as they need to. So that's one source of funds. The other is Japan. Japan changing the way the large pension systems are working to where that monies that are invested are no longer in lower yielding bonds, but instead of going after equities, both in their stock market and around the world, as well as higher yielding bonds. And ECB, we already know the big decision that was made there that actually got this big run started. So the ECB is the other big part of that. So you've got those three things continuing to push these equity markets higher. Also had some economic numbers out today. You had the, as I talk about those, I'll flip through the charts, but you had some industrial production numbers that were a little bit better. They came in at 0.6 versus 0.5. So inside day here on the NDX as well. And let's look at the Dow while we're here. Also had the housing market numbers come out, and it rose up to 49 from 45 in terms of the index, which was also better than expected. The Dow Jones inside day 2. So you got inside bars still. 4 of the 5 indexes. The Russell's the only one that gets over it, and the Russell continues to try to push to the high side. Let's look at the sectors. I really didn't get a chance to go over any of these today and make any notes, so I'm kind of winging it here with you today. So let's pop in here and see what we got. So let's just flip through them right quick and see what they look like. So we'll start with the transports. Inside day didn't test that low, so that still could get tested again. And it had a little bit more volume. So this one, you know, I've talked a long time about this one probably being a range trade. It definitely looks like a range trade now. You had the big push up. You still pushed higher, right, as the market kept going higher. Now you come off, and then you get the huge bar down, right? That definitely, to me, looks like a range trade now. Semiconductors, Intel came out last week, juiced this sector even more. Had a 2 to 4% run still, depending on the daily and the weekly ABCD structures. And this one also continues higher. This one's already got another ABCD structure that points even higher nested inside of it now. So you've got another one here that takes it up even farther. That takes up to about that 4% number on the weekly. You've also got the ABCD that's already in place that takes it up to about here, right? So, you know, I don't see this backing off anytime soon. We had volume expansion today. That still looks good. SOX looks like it could still work higher. And man, when those get going, they get going. XLB, these guys were trying to come back for a retest, regen situation. Volume escalation today. And that's actually not good. It's probably going to come back again. Okay, so that high it's trying to get into is 48.67. Still hasn't got there. I wouldn't be surprised to see this come down one more time and try to test into that area. XLE energy, of course, has been strong as a result of what's happening around the world geopolitically, and it continues strong. This one has ABCD structures that measure to about 100. It almost got there today. XLF, this was coming back in for a retest regen, and it is doing almost the full retest regen here. So if you draw this one in, the retest regen is off of this bar. This will be the last day we see it. So that support zone, that retest zone, is the bottom of that bar. That low is 22.37. We got as low as 22.44, and now we're coming into the second of the two is 22.56. Volume still not that heavy. This looks to me like it is going to successfully retest and try to regenerate higher. XLI, and that's a key one, XLF. XLI was also trying to get back, and I don't know if this one's going to even get back and do the retest regen. Would be more than 6 bars, would be an automatic type buy situation, very high probability that it bounces on the first test. Still looks like it may or may not. I mean, it's a coin flip as to whether it will get back there. XLK, so it comes off big with no volume on Thursday, right? And then comes in a little support zone now. Bounces back up. This is inside bars as well. So, you know, when I see something like this, and we're not talking big bars here, but when I see something like this, what this tells me is that whichever side breaks is probably going to get some carry through. And so when you have a bar like this, especially if it had volume on it, which this one doesn't, you know, those breaks of that range bar tend to lead to larger moves. For example, if I see this one, you know, it goes lower, comes back in, hangs there, and then it breaks again on a large one, then you get some follow through. And that was against the trend, and you got the follow through. So we'll see which way this breaks. These will be key bars. The Thursday, getting back over Thursday's high in many of these indexes and sectors will be a key point. XLK, and that the XLK, the XLK has some volume pushing up on the upside, even though it's still inside day. Here's the XLP, just like the what was the IYT or the XLB, just like the XLB pushed volume today. I know we had like 3 or 4 takeovers announced today. One of them was in this group. It's hard to read whether this is going to do anything more to the downside. Typically, I would say yes, but the way this bar looks tonight, I'm not sure if it will. XLU is more of a safety play. Was heading higher today. Got back up towards the top of the range. Nice volume. I expect that one to test some more. So it's testing into this bar again, 43.16. And you got the 43.19. It's doing 21 versus 27. Yeah, I would think that tests some more. And this may even set up an ABCD breakout on the upside, right? That would get it over the highs. So that will be one to watch. XLV, so the healthcare sector, also takeovers in this sector. Pushed some volume, couldn't get anywhere though. So this one had already done a retest and is trying to regenerate higher as well. And the last one here is XLY. It's trying to do the same thing. And let's see what it did today. And yes, it held the retest regen. This was a full retest regen, just like we looked at on the XLF just a second ago, where it's trying to do it. This one did it. Came all the way to the bottom. Didn't have as much volume. Starts to bounce back up today. So each of the sectors and the indexes so far have held those retest regenerates and are trying to actually regenerate to the upside. Let's take a look real quickly at the OX markets, and then we'll sneak a peek at some of the questions y'all have for me. So let's see what we got here, and I'm only going to look at 2 or 3. I'll look at the overseas EEM as a group. So this is emerging markets. This is also retesting, trying to regenerate. Looks like it will. Gold had pushed up quite a bit, came off a bit today, and got a little volume escalation. That looks to me like it did finally fell up there. It's going to pull back some more. That low on that high volume bar is 123.07. Excuse me, that's not right. 121.75, and about another quart with $7.50 on the contract. So I would think it will try to get back into that tomorrow. And let me see if silver did the same thing, because silver had been much stronger, was up testing the highs, and silver actually hung up there. A doji, that top was 18.95. We hit it again today. Do fives, do less volume. This one's going to come back tomorrow. And then quickly, let's see what the bonds did. So bonds have been trying to push back up, but they're really struggling to do so. And today looks the same. And it looks to me like they're going to fail here, and they're going to finally set up potentially that ABCD structure to the downside. So we'll see if that's the way it shapes up, but it kind of looks that way to me. Yeah, this is a tough call. Bonds are a tough call, because in the tough call is here. I mean, you just had, right, first you're coming into a big support zone, and then you had kind of a big bar up on Thursday as a result of the sell-off in the stocks. But it just can't get over it, and it can't get back into this zone, right? So you've got this support here, that resistance there, it's working in between them. So if I had to, if I had to make a bet, what I would do is I'd draw that range in, and I'd say, okay, you get over the range, I'm going with you. You get under it, I'm going with you that way, if I was trading this thing. All right, let me see what kind of questions we might have out here. I had some emailed to me. Let me take those first. If you have some, you can pop them into the chat room, or you can email me at support@TA-Today, or text me at 303-912-9110. I'll take them either way. So let's see here. So these were all short-term. There's 3 of them, short-term trading. So the question is what are they going to do? Okay, so Google is the first one. 1.6, 1.8. Well, we had looked at this before, and we were looking to see if it could get up to the highs. It didn't quite get there, right? Now you get 5 days of pullback. Today volume escalates a little bit, but it's really still low volume. This, for me, this is still a range trade. And if I pull over the weekly chart, until it breaks out of this range, it's just a range trade. And the range looks like about right there. And if I could draw it right, there's one underneath it that's about there. And so those two ranges, almost equidistant, right? Tried to get into the higher range, couldn't do it. Now it's coming back down. Will it come all the way to the bottom of the range? I kind of doubt it. And I kind of doubt it for 2 reasons, and those reasons are here and here. Both of those look like support to me, pretty good support. If it's going to come back in deeper, I would think into this area. If it starts breaking swing point lows, then it becomes a whole different story. But right now, that's not the case. So far, that doesn't look bad. The next one is, I wouldn't be buying it here. I'd be waiting. Next one is Hyster-Yale Materials. And this one we've looked at before too. Let me see what the weekly looks like. Yeah, this is I mean, it still looks like it's going to try to work higher, but I think there's easier trades. And the problem you're dealing with here is this big bar, and I mean, it is a range. Like we talked about before, if you break under the range, usually you get some carry through, which is what it did, right, for a while. Got back over it. Now it's testing into that low again. right? Got nothing as it's coming back. Kind of looks like a buy to me. You don't have to risk too much on this. Matter of fact, I mean, even though it cuts your probabilities of success down a bit, you could risk to like 84 and a quarter or whatever you want to put up underneath here, because if it gets under, let me see, that high is 84.92, 85.20. Yeah, if it gets under about 85.40 or so, it's probably going to go down deeper into this low, which is 82. So if you're going to buy it, you buy it right down at the bottom of this support zone as best you can, as close as you can at the bottom of this bar, which is 85.51, and you give it about $1 probably, not much more. JP Morgan, bank stock, the financials we've seen is coming back in. Okay, so JP Morgan got sold down on earnings. Remember, we're about 2 weeks away from, well, we're about three and a half weeks away from earnings. So earnings will be coming up again. The banks are the first. This will be one of the first. So they're probably going to report in about 3 weeks. So a trade here, you know, has to be a shorter term trade because you're working a 3-week cycle, right? You've only got 3 weeks to make the trade. Did an ABCD up, has finished it off, got over, you know, this high in this criticals area, comes back into that high today. So that's a retest regen. Looks like it's going to hold. The most you can expect is probably this zone that shows up here as a resistance zone. So that's your target. This pullback, assuming it stops here, gets you right to that target. So yes, you could buy it, put your stop up underneath this bar, so down in here somewhere, and you're shooting for that area. It's about a 2-to-1, so that one probably makes sense as well. Let me see if we got any more questions. Yeah, IYR. So we looked at IYR maybe a week or so ago. I think my comment then was that it would probably come in a bit more. And it looks like it did. Okay, so let me see what the weekly looks like. IYR. Huh. Sorry, I'm really focused there trying. You know, the thing is here is I think it's still going to go lower, but I think you could get a bounce into this bar first. So I think you bounce into the 71.68 area potentially. Yeah, I take that back. Here's the thing: this is a range trade right now, off of 2 bars, off of this low, and off of this this area up here. Right, I'd probably take the bottom of that bar. So your range is right here, right? It's in that area. You've got multiple swing point lows here that if you start to break them, right? If these start to break, and they're not that far away, right? Then you can get a deeper retrace, just off the fact that you're breaking multiple swing points. And you can see that there's a lot of support, but lately there's been a lot of selling. So that's the problem there. That could bring you all the way back into 68.50. Oops, go back to here. Yeah, I could see you getting back into that. So I just don't see the trade here still. And the question with rates possibly going higher as compared to XLU, also based on rates, it's confusing. Yeah, XLU is partially, they're selling energy, and right now energy is helping. So, you know, because the alternatives to coal and some of the other things that are out there are getting more and more expensive with oil and natural gas and stuff going up. So, and they also pay a huge dividend, right, the utilities, which a lot of people buy them for that reason. It looks to me like this one's going to come in deeper, so I'd be careful there. All right, I'm about out of time here. So far, so good. I mean, retest regen's holding. You got the Fed in 2 days. I would be very surprised if you sell off or run too far in front of the Fed. Fed's going to be the deal maker one more time, and that will be on Wednesday afternoon. Folks, thanks for joining me. Have yourself a great night. Take care of yourself until next time. I'm LA. This is and was your daily TA wrap. I'll see you next time. Good night.